Welcome back. In this learning unit, we will explain important conveyancing concepts, we will provide you with an overview of the conveyancing process, and we will learn how to record conveyancing transactions. For those of you that are familiar with conveyancing fees, you will soon notice that the amounts used in most examination questions are not very realistic, but we work with what we have. Good luck. Let's start by looking at property finance. The purchase of immovable property can be financed through personal finance such as cash or through loan finance such as a home loan. Home loans are also referred to as mortgage loans or bonds. The purchase may also be financed through a combination of the two modes of finance. Knowing the mode of finance is important because cash is received before registration of the transfer and loan finance is only received upon registration of the transfer. Next, we look at the various conveyancers involved in the conveyancing process. The first conveyancer is known as the transfer attorney and attends to the actual transfer of the property from the seller to the purchaser. There will be a transferring attorney in every conveyancing transaction. Where the purchase is financed through loan finance, the financial institution will require the registration of a mortgage bond over the property. This is undertaken by a bond registration attorney. If there is an existing bond registered over the property, the financial institution will require the bond to be cancelled, which is undertaken by the bond cancellation attorney. Bond registration and cancellation attorneys are not found in every conveyancing transaction. For our purposes, we will focus on the transactions in the books of the transferring attorney. The final concept we explore is that of costs and who is responsible for the payment of those costs. Transfer costs are all amounts paid to the transfer attorney for the transfer of the property. These costs are paid by the purchaser and include, amongst other, the attorney's transfer fees, municipal and body corporate clearance figures, transfer duty, and deeds office levies. The majority of these fees are fixed and can be found in the conveyancing fee guidelines published by the Law Society of South Africa on an annual basis. Bond registration costs are all amounts paid to the bond registration attorney for the registration of the new bond, and the bond cancellation costs are all amounts paid to the bond cancellation attorneys for the cancellation of the existing bond. Bond registration costs are paid by the purchaser as well, and bond cancellation costs are paid by the seller. For our purposes, we will only concern ourselves with transfer costs. Now we will explore the basic conveyancing process. To simplify the process, we distinguish between the pre-registration phase and the registration phase. The pre-registration phase is further divided into the inception, preparation, and lodgement stages. The registration phase includes only the actual registration of the property. The inception stage is characterized by the transferring attorney receiving the offer to purchase and an instruction to transfer. The transferring attorney will then request the prerequisite FICA documents and will provide the purchaser with a pro forma invoice for the transfer costs. At the same time, the deposit, if any, and the bank guarantee confirming the home loan approval is requested. The transfer attorney may also request the clearance figures from the relevant authorities. The preparation stage involves a number of transactions that you will encounter as we progress through the learning unit. Here the transfer attorney will receive the transfer costs, will receive the deposit if there is any, may invest the deposit, may receive the bank guarantee if there is one, make payment of the clearance figures and transfer duty, and will attend to the drafting and signing of all transfer documents. Clearance figures, in essence, involve the advance payment of the municipal rates and taxes, as well as the levies if it is a sectional title. Clearance figures are always payable by the seller. Once all the requirements have been met, the transaction is lodged with the deeds office for registration. Upon registration, the final lot of transactions will take place. The bank guarantee, if there was one, will be paid into the transferring attorney's account. The investment, if one was made, will need to be withdrawn, and the transfer attorney will make payment of all accrued interest, the attorney fees, the agent's commission, if there was an agent, and the proceeds of the sale to the seller. As a final step, the transferring attorney will then account to the seller and the purchaser. Let's take a look at an examination question. Your client, Mr. Purchaser, has purchased a home from Mr. Seller for 1.5 million rand, payable with a deposit of 500,000 rand. The financial institution has approved a mortgage bond of 1 million rand. All transfer and bond costs are to be paid by Mr. Purchaser. Before we continue with the details of this transaction, you will note that conveyancing transactions include transaction dates, which up to now you've not encountered. You must enter the dates into your bookkeeping records whenever dates are provided. The following are the details that were provided. On 6 July, Mr. Purchaser pays you the deposit of 500,000 rand in cash as well as 125,000 rand by cheque in respect of the transfer and bond costs. On 7 July, you receive a bank guarantee for the amount of 1 million rand. On 8 July, you pay transfer duty in the amount of 90,000 rand. On 11 July, you invest 500,000 rand in a trust investment for the benefit of the purchaser. On 26 July, the transfer and the bond is registered, and you account to Mr. Seller and Mr. Purchaser, debiting Mr. Purchaser fees in the amount of 15,000 rand. You receive 5,000 rand interest on the investment. You are required to record all the transactions in your trust and business books of account and to pay yourself the amounts due to you. For the purposes of this question, you are not a VAT vendor. Let's record each of the transactions. On 6 July, you received a deposit in the amount of 500,000 rand as well as transfer and bond costs in the amount of 125,000 rand by cheque. Take note of the fact that the transfer and bond costs were received by cheque. Go ahead and pause the video, then record the transactions in your books of prime entry. The trust cash book is debited with the total being 625,000 rand. Mr. Purchaser's trust account is credited with 625,000 rand. Remember to include the dates and to reference the contra accounts correctly. On 7 July, you received a bank guarantee for the amount of 1 million rand. Stop! This is not a transaction. Many candidates record this transaction as a cash receipt into the trust bank account. A bank guarantee merely confirms that a loan has been granted but does not constitute a financial or negotiable instrument. Don't fall into the trap. On 8 July, you make payment of the transfer duty in the amount of 90,000 rand. Who must pay the transfer duty? The purchaser, as it forms part of the transfer costs. Are we holding monies in respect of the transfer cost? Yes, we do, but we have a problem. The amount of 125,000 rand was paid by cheque on 6 July. It takes 10 days for a cheque to clear, therefore the amount will only be available in 10 days' time. Accordingly, we do not have sufficient funds in the trust account to pay the transfer duty. Notwithstanding the fact that we are holding 500,000 rand, that amount is specifically ring-fenced for the purchase price and cannot be used for the payment of the transfer costs. Since we do not have any client trust monies at our disposal to pay the transfer duty, we must make the payment from the business bank account and then recover the monies from the client once the cheque funds are accessible. The BCB is credited with 90,000 rand and Mr. Purchaser's business account is debited with 90,000 rand. This type of question occurs frequently, so don't be caught off guard. Hashtag read carefully. On 11 July, you invest 500,000 Rand to the benefit of Mr. Purchaser. If the investment is to the benefit of Mr. Purchaser, what type of investment is this? If the purchaser will derive a benefit, it must be a Section 86(4) investment. Recall that Mr. Purchaser's trust account will remain unaffected because the liability towards him remain unchanged. There will only be a movement of cash between the trust bank account and the investment account. The TCB is credited with 500,000 Rand, thereby reducing the asset, and the investment account is debited with 500,000 Rand, thereby increasing the asset. On 26 July, the transfer registers, which means that the bond guarantee you received on the 7th of July will be paid into the firm's trust account. In many instances, the question will not inform you that the bond guarantee was received because you are expected to know what happens on the date of registration. The bond guarantee of 1 million Rand is paid into the trust account. Accordingly, the TCB is debited with 1 million Rand. At this point, the bond guarantee is in favor of the purchaser. Accordingly, Mr. Purchaser's trust account is credited with 1 million Rand, thereby increasing the firm's liability towards Mr. Purchaser by 1 million Rand. On 26 July, you received accrued interest in the amount of 5,000 Rand. Where must the inflow be recorded? In the Section 86(4) bank account. Accordingly, we debit the Section 86(4) bank account with 5,000 Rand. What should happen next? The capital and interest must be transferred back to the firm's trust account before we can deal with the money. We must first determine the amount to transfer, wherefore we tally the amounts on the debit side of the investment account. In this instance, it amounts to 505,000 Rand. We then transfer the amount to the trust account by crediting the investment account with 505,000 Rand. And then we debit the TCB with 505,000 Rand as well. We can now close off the investment account since there's nothing further to do with it. What are we to do next? If you said that we should allocate the interest, you are correct. Who does the interest derived from a Section 86(4) investment accrue to? 95% accrues to Mr. Purchaser, so we credit his account with 4,750 Rand. And the other 5%? It accrues to the LPFF. Accordingly, we credit the LPFF account with 250 Rand. At the same time, we can go ahead and pay the LPFF so that we can close off their account. We credit the TCB with 250 Rand and debit the LPFF account with 250 Rand as well. The firm's liability towards the LPFF is now extinguished and we can close off the account. On 26 July, you also raised fees in the amount of 15,000 Rand. This is a non-cash business transaction, so we have to raise the fee in the fees journal. Mr. Purchaser's business account is debited with 15,000 Rand, and the fees account is credited with 15,000 Rand. Since there are no other fees to be charged, we can close off the fees account. Since the next step is to transfer what is due to the firm, we can also tally the amount owed to the firm by Mr. Purchaser. In this instance, the amount is equal to 105,000 Rand. Next, you have to pay yourself whatever is due to you. Remember that we always start with the value step. For this transaction, we will require Mr. Purchaser's trust account as well as Mr. Purchaser's business account. Since the value step is a non-cash transaction, we need to first pass a transfer journal. Mr. Purchaser's trust account is debited with 105,000 Rand and his business account is credited with 105,000 Rand. Accordingly, Mr. Purchaser's indebtedness towards the firm is now extinguished, so we can go ahead and close off Mr. Purchaser's business account. Next, we need to transfer the actual cash amount. Remember that this is also called the cash step. For this transaction, we require the trust bank account and the business bank account. This is a cash transaction, so there is no need to record the transaction in a journal first. We credit the TCB with 105,000 Rand and debit the BCB with 105,000 Rand. Since the list of transactions does not contain any other business transactions, we can close off the BCB. Once we've paid the firm, we can go ahead and pay the seller whatever is due. Again, we start off with a value step first. Before we continue, let's just create a trust account for Mr. Seller. This is a non-cash transaction, so we have to pass a journal. When monies are transferred between trust accounts, we make use of a journal called a trust journal. The purchase price is 1.5 million Rand and needs to be transferred from Mr. Purchaser to Mr. Seller. Accordingly, Mr. Purchaser's trust account is debited with 1.5 million Rand, thereby decreasing the firm's liability towards Mr. Purchaser in the same amount, and Mr. Seller's account is credited with 1.5 million Rand, thereby increasing the firm's liability towards Mr. Seller by 1.5 million Rand. Once the value is transferred, the next step is always to transfer the cash amount. Since there are no monies owed by Mr. Seller to the firm or any other party, we can transfer the full purchase price to Mr. Seller. If agent commission was due and payable, that would need to be paid first before the balance could be transferred to the seller. Cheap round this time though, so we credit the TCB with 1.5 million Rand and debit Mr. Seller's account with 1.5 million Rand, thereby extinguishing the firm's liability towards Mr. Seller. We can go ahead and close off Mr. Seller's account. Now we need to transfer the accrued interest to Mr. Purchaser. However, once you tally up Mr. Purchaser's account, you will note that there is a balance of 24,750 Rand left in Mr. Purchaser's account. 4,750 Rand is in respect of accrued interest, whilst the remaining 20,000 Rand is the surplus of the transfer cost that we did not use. Since there are no other payments to be made on behalf of Mr. Seller, and since we do not hold instructions to hold the money against prospective liability, we will pay out the entire amount to Mr. Purchaser. To transfer the amount, we credit the TCB with 24,750 Rand and debit Mr. Purchaser's account in the same amount. Accordingly, the firm's liability to Mr. Purchaser is now extinguished. Next, we tally the TCB debit side, which amounts to 2,130,000 Rand. Then we tally the TCB credit side, which amounts to 2,130,000 Rand. Our account balances, and there is no deficit. I guess we did it right then. Let's take a look at our trust books to see what we've done. Let's also take a look at the business books to see what we've done. Finally, we are required to account to Mr. Seller and Mr. Purchaser. Since Mr. Seller's account has the least transactions, we'll start there first. To draw the statement, we need to obtain the information from Mr. Seller's trust ledger account. On 26 July, we received R1,500,000 from Mr. Purchaser as the purchase price for the immovable property. On the same day, we paid the amount of R1,500,000 to Mr. Seller by EFT. We tally up the statement's debit and credit side and always make sure that it corresponds with the client's trust ledger account. We can now account to Mr. Purchaser. As before, we require Mr. Purchaser's trust ledger account to draw the statement of account. On 6 July, we received a deposit of R625,000. On 26 July, the following transactions occurred. We received a bank guarantee in the amount of R1 million and accrued interest on the investment in the amount of R4,750. We paid an amount of R105,000 to the firm, which included the transfer duty in the amount of R90,000 paid on behalf of Mr. Purchaser and attorney fees in the amount of R15,000. We also paid the purchase price of R1,500,000 to Mr. Seller, and finally we paid the surplus and the accrued interest to Mr. Purchaser in the amount of R24,750. We tally up the statement's debit and credit side and always make sure that it corresponds with the client's trust ledger account. That concludes the study unit. Please make sure that you repeat this video until you are fully conversant with the conveyancing transactions, as you will almost certainly have to deal with a conveyancing transaction in the examination. Please feel free to send us an inquiry if you experience difficulty. See you in the next learning unit.